Hey guys, interest rates just dropped by 0.25%. Let's talk about what we do about that now, right? What's the so what? Let's talk about the 5 situations where you should go to your bank and refinance, because you will either make a lot of money or save money in the process of doing so. I'm actually in Dubai at the moment. I'm not feeling 100%, a little bit under the weather. Just come here just to basically get some warmth and recover. You can see the Burj Al Arab there. I'm at the Al Qasr, Jumeirah Al Qasr resort, which is, we always come here. I think it's my favorite hotel in the entire world, mostly because of this beach and yeah, just the service. It's really amazing. Anyway, let's get into it. So you might find that the interest rate drop by the RBA is not passed on by your bank. Now, of course, the big 4 banks have already come out and said that they'll pass it on, which is great. But not every bank has said that. Certainly not every second tier, third tier lender has said that. So, when it comes to property ownership, whether you're an investor or you've bought to live, you can't just get a 30-year mortgage and forget about it. That is a clear way to overpay by tens of thousands of dollars of interest through the lifetime of that loan. You need to actually stay on top of it. So the number 1 reason you should refinance right now is if you're with a second, third tier lender who is not passing on that 0.25% interest rate reduction that the RBA has enforced on the official cash rate. All right, don't just think that your bank, you pepper money, etc., is going to pass it on. They may or they may not. At least give them a call and get something done about it. All right, so the second reason you should refinance, or you should consider refinancing, is that if it's been at least a year or maybe even 2 years since you got your loan. Credit policies change, and of course interest rates change, borrowing incentives change, bank policies change. And so the way in which the bank saw you as a credit risk may have changed in their own eyes, because their own calculators have differed. So if you go to the bank and it's been a year, 2 years, you might actually be much more favorable in their eyes now and get not just 0.25%, maybe a whole percent off. All right, depends on a whole host of things, but it's definitely worth investigating. The third reason you should refinance is that your financial situation has fundamentally changed. All right, so just like, this is a direct quote from a friend of mine, Tom Newman, who's a mortgage broker. He's really fantastic, and it's the inspiration actually for a lot of this content today. Just like you change your hat, just like you change your coat, etc., your own financial situation changes. Like, you might get a raise, you might get a pay rise, you might have your wife go back to work after a period of maternity leave, etc. All of these things mean that you're actually, once again, should be treated differently in the bank's eyes. And so you should go back to your bank and explain your updated, refreshed financial stature. And in that way, you may also be able to refinance and get a much, much, much lower interest rate. The fourth reason that you might want to refinance is that your fixed period is coming to an end. All right, so a lot of people, what they do inexplicably really is, let's say they're on a 1-year fixed period loan, fixed rate loan, 2-year, 3-year fixed rate loan. And as that matures and it gets swapped over into variable, they just stay with the same bank as if, like nothing is meant to be done about that. But if you stay with the same bank, they may not give you the best outcome. They may not give you the best interest rate. Just before it's about to expire, you should go to your bank and say, well, what is the prevailing rate you're going to give me in terms of variable now? And you should also check that with multiple other banks. Go through a broker if you wish. Highly recommend that. And in that way, you can go to your bank and say, well, these other banks are going to give me, 5%, I'm just making this up. You've said you give me 5.5%. yeah, I'm gonna go to this other bank. They may beat it for you, or they may not, in which case you can just go to the other bank. So don't be lackadaisical, don't be complacent, and just have your how do you say, well, there's sand right here, don't you have your head in the sand when it comes to the options available to you. Number 5, another reason why you might want to refinance is if you've already built up equity in your property. So certainly, if you're a client of mine, or if you know what you're doing in property investing, you should be making hundreds of thousands of dollars on a yearly basis in equity. Let's say you're a homeowner, you're not interested in investing. Regardless, if you hold a property, a well-located property in Australia for any period of time, chances are it goes up in value. Every time it goes up in value, your LVR, your loan to value ratio, is coming down. In other words, the amount of mortgage you have on it as a proportion of its value is going down, and that's because the value of the property is going up. All right, so as a percentage, you're owning more and more of it. Equity, that's called. So you go to the bank and say, well, now I have more equity. In other words, this property, this asset, this security, my risk profile in your eyes should be lower risk, because now there's more security against that initial mortgage, because that house is worth more. Therefore, I should be able to renegotiate a better interest rate. So the more equity you have, the higher your property price goes compared to the value of the mortgage, the better, or the lower risk that mortgage becomes. So therefore, commensurate, the interest rate should be lower. So that's the next reason why you should refinance. And the last one, number 6, is if you want to cash out equity. So many of you guys are literally, you're just sitting on a treasure chest. Really, you're literally sitting on a treasure chest. You might have one or more investment properties, or most likely you have your own home, and it's, you've got hundreds of thousands of dollars of equity there untapped. What you should do, look into doing, is think, okay, well, it doesn't matter if I don't have a whole lot of savings. It doesn't really matter that I'm on a low, or let's say medium income. I have this untapped potential. Let me go to the bank. They will allow me to take that equity out, and I can use it for a deposit for an investment property, maybe 2, maybe 3. And if you play your cards right, you follow data, etc., then if you invest that equity into investment properties, then those investment properties, they fructify. It's like planting a seed. It grows a plant into a tree, into fruits, and then those fruits, that capital growth you've achieved, that capital growth can be used to not only pay down the same equity that you took out, but also all the other debt that you have on that initial principal place of residence. That's just one strategy. You don't have to pay down your principal place of residence. You could use it to carry on buying or do whatever you want, but I'm just illustrating that that's another viable means, or a viable method by which, or for which, you should or could take equity and basically refinance your existing loan. All right, refinance your principal place of residence. Equity is a fantastic thing. Most people that have it don't realize they have it, and even those that do realize they have it, hardly anyone, even of them, actually do anything about it. All right, so those are the 6 reasons why you should consider refinancing, or situations where it sort of behooves yourself to think about refinancing. Interest rates are dropping. I don't think they're going to drop too much more this year, but if you follow these strategies, you might get a 0.5%, 1%, 1.5% cut, even if in 2025 the RBA only cuts official rates by 0.5% or 0.25%. Hopefully that made sense. Those are the methods, or the 5 reasons why you should or could refinance. Remember, property is as much a lending, a finance game, than it is about where should I buy or what should I buy. Really invest in your own education. that is the most important thing. All right, the 6 inches between your 2 ears, that is the most important real estate that you own, that I'll own, that anyone has ever owned. You know, they've built Dubai in the last 20, 30 years. And of course, I'm sure that the sheikhs are very proud of their achievements. But I think, you know, all the credit really goes to the initial ones that had this idea and then worked on this idea. They had to bring in all the best talent from around the world to manifest their dream of building Dubai in the way that it is. And really that was their most important asset. And so when you invest in yourself, you know, what you're worth manifests externally, outwardly, into beautiful buildings, into beautiful assets, into beautiful hotels, and beautiful conveniences like this. My name is PK. I'll leave links below as always to my podcast, Oz Property Mastery with PK, on Spotify, Google, iTunes. And to level up, I'll leave the links below also to my Facebook group, Australian Property Mastery with PK, with more than 60,000 amazing people. You can see I'm not 100% well, but I was just lying on the beach all day, so I thought I'd do this video. Thank you for being with me, guys, and see you next time. Hit the subscribe button, give it a like. Thanks, bye.